Broker Bulletin acknowledges the traditional custodians of all the lands across the country on which we record our podcast and pays its respect to all Aboriginal and Torres Strait Islander people. Welcome to the Broker Bulletin podcast, where better begins. Join us as we chat with brokers about what's working for them, what drives them, and the real challenges and wins that matter most right now.
Welcome, everybody. Thanks for joining us today. It's a really, really special day, week, month, year for us as we launch our flagship week for Diversified Broker. Today, we also launch our new MyCRM diversification platform. So this is something that LMG have been working on for, let's say, years. We can't believe we're actually here today. So we're all really excited. We've been talking about diversification for way longer than before I guess I started here. But now we're actually going to give you the tools and the pathway to actually start to diversify your income and your business. So now we get to the fun part. So Matt Centrone, thank you for joining us, Director of Centrone Finance in SA. And Jason, good to see you've made it through. Jason is the MD at eCarz Group in Queensland. So thanks for joining us today, guys. So let's have a chat with you guys. Matt, tell us a little bit about how you got started in brokering and moved into the commercial space.
Yeah, thanks, Claire. Thanks for having me. I guess I started off as a residential broker probably about 15 years ago and definitely wasn't by design getting into commercial. It just sort of some opportunities started presenting themselves with existing clients and some client referrals. I just took a bit of a deep dive into it and didn't want to say no. And back at that time, there probably wasn't the support that LMG offer now. It was pretty much just sort of find your way through. So I guess back then I just got on the phone to commercial BDMs at the time and sort of tried to work out the deals myself. And I sort of learned on the job, so to speak. Once you sort of do one or two, you sort of get your head around it. All of a sudden, 15 years later, you're known as a commercial broker along with the residential side. So it was organic rather than by design.
How did you find that first deal? Like, where did you start? What did you do? Who did you rely on?
It was actually, like I said to you, that first commercial deal I had was actually a bigger deal. So it was about a $6 million shopping centre, which back then was a decent sized commercial deal. And so I just didn't want to say no to it and I wanted to try and set it. I lent on a few of the commercial BDMs and I said, look, I want to write it. Can I get accredited? And I sort of just backed myself in to just learn what was needed. Once I did a bit of a deep dive, I realised apart from some differing LVRs and understanding what a commercial banker wants for the approval, it's not that far removed from residential. Probably some upside is you don't have to spend a lot of time on compliance. There's probably more time spent on putting the deal together and presenting it to the bank. But the actual mathematics around it is quite simple. The only thing that you probably, for someone that hasn't done commercial, is you probably have to get your head around some more complex structures with the clients. But my background before becoming a finance broker, I had a legal background. So some of those structures weren't that foreign to me. So that was probably a little bit of a leg up that I had. But it was really just around giving it a go, reaching out for help. And I found that as long as you ask for help, everyone's always happy to help. We ended up setting that deal and then it was off to the races, so to speak.
And Jason, how about you? Where did you start and what's your passion for asset finance in particular?
Thanks very much for having me as well. I appreciate it. When we started, ironically, that the name of the business kind of says it all. When we started, it wasn't about doing everything asset finance. My background was in running car dealerships and the finance across car dealerships. My last role before starting this business was overseeing 18 dealerships for the finance and car care. Previously to that was there's a GM and DP. When I first started this business, it was about cars. Hence the name of the business, eCarz, was about being able to help our customers buy cars, sell cars and finance cars. It wasn't about boats and trucks and jet skis and anything else. And at the time, we're thinking of a business name and we weren't thinking anything past cars. So probably like Matt, you sort of go on, you start your journey and you sort of go one way, but then you just keep going with it and see where it takes you. After doing cars for a while, we had a few of our clients asking us, hey, can you find us a caravan for me? Yeah, I guess we can. And approach the lenders and simple enough. And we did a caravan. Then can you do a truck? It's like, sure. Maybe we'll jump on your website and it's all very car heavy. So over time, we ended up rebranding the business and calling it eCarz Group. And if you jumped on ecarzgroup.com.au, you now see there's about 20 different websites for different things that we do. So we're trying to approach, and we've got different people within our business that are specialists in different areas. So we've got certain people that do a lot of personal loans and boats and jet skis and caravan leisure assets that don't necessarily dabble in cash flow finance or trucks. Then we've got other people in the business that do a lot of commercial lending that don't dabble on the other side. So we're trying to have people that are more specialists in certain areas rather than being a bit of a jack of all trades. Cars is probably still 50% of the business or 60% of the business, and the rest of it is a mixed bag of everything asset. But like Matt said, fundamentally, it's not that different. Once you're taking an application for a car loan or a jet ski or a caravan or a boat, you're collecting 90% of the same data. So it's just a matter of understanding what else they're looking to do beyond that transaction as well. For example, if it's a commercial transaction, it's about taking the time to understand more about their business rather than, you're just looking for a 20 grand jet ski. I guess just taking the time to understand your clients, understanding who they are, what they do. And when it comes to commercial, it's understanding a little bit more beyond this transaction. What are their long-term goals as well? So then you make sure you're putting them with the right lenders, whether having lines of credits or having some cash flow funding and have a bit of a strategy beyond this one transaction. When you're talking asset, sometimes they just want 20 grand for a personal loan or for a jet ski or whatever it is. And that's what it is.
What challenges do you think the industry faces right now in the asset finance space? How do you think you can help or address those?
I think one of the things, and it's an interesting question because I speak to a lot of brokers and they are very worried about compliance. I'm not concerned about compliance too much as long as you do things right. I don't think you've got anything to worry about, in my opinion. What you need to do, these are your steps, and as long as you follow the steps, you're okay. You don't have a great deal to worry about. There's nothing that really concerns me too much. It's really just staying up to speed with the policies. And, we've got over 60 lenders on panel. Just making sure that you're finding the right lender for the client, ticking all the boxes, making sure you address all their wants and needs and finding the right lender and why you've matched them up with that lender rather than going through path of least resistance because I like that lender. That's not what's best for the client. In asset finance, technically, we're not underbid, but we actually act like we are within our business and we document why did we go to that lender and we have all the notes because I just want to have good practices within the business for our staff. So I don't see it as if anything, the threat is other brokers that don't do a good job for clients. That's probably my biggest threat, if I'm being honest, because we see things that brokers give clients that are absolutely the wrong answers or wrong information or false quotes. And we've had a quote recently from a client and I almost had to it was almost head-to-head with the client because he's been given a written quote from another broker that was false. It was as simple as that they've removed the balloon and they're telling the client that it's got a balloon, that it doesn't have a balloon, but the loan did. So, look, I'd just like to see everybody do the right thing, obviously.
And I'm sure that wasn't an LMG broker that gave that false information. On that, how do you keep up with all the lenders? Like you said, 60 plus lenders. How do you keep up with all their policies and changes?
Within the Salesforce system that LMG's built out, there's some great tools in there that help with lender policies that you can jump in and have a look at it. There's also some lender matching engines. I don't live by that. I think it's just a guide. And I think it is really, really important to remember that for anybody that is doing asset finance, because often lenders will do things outside policy and the computer can't read grey. Computers generally will answer based on information that you've given. So if you are doing asset finance, keep that in mind. A lot of it is about being up to date, and we catch up with lenders regularly. Within our office, we have at least 5 or 6 BDMs through a week. So you're constantly meeting with BDMs, you're constantly speaking to the lenders. Yes, we've got 60 lenders on panel, but there's probably 10 that you do a lot of your business with. So you don't have to know every single lender's matrices intimately, but you've got a good grasp on who's doing what. We do get involved in all the lender seminars. We do jump in on all of them and see who's doing what new policies, what's changing to try to stay on top of it. We're probably fortunate that we've got a number of brokers in our office that sometimes I don't know the answer off the top of my head, but I can yell out and across the office and I've got 8 other brokers here that can answer the question. So that definitely does help. Being part of a team does help.
Thanks, Jason. Matt, your turn. So what do you think, any issues or industry that you're facing at the moment?
In the commercial space, probably one of the challenges we have is to write a commercial deal, you generally have to have relationships with business bankers, depending on the size of the deal, whether if it's sub 1 million or between 1 million and 3 million or 3 million up. There's usually different bankers in the different lenders that are going to help write the deal before it goes to credit. I probably think one of the challenges at the moment is in the banking world, those bankers tend to move around a lot. You might have a relationship with one of those bankers. They're a good operator, but then they move banks or they get moved into different departments. So I think one of the challenges is just maintain a really commercial acumen yourself So you can write the deal depending on which banker you get, because there are varying degrees of skill sets that we find within the banks. But I think that's one of the challenges within the commercial world. We find that the bankers tend to move around a lot, which is difficult. You could also look at that as an opportunity. I guess there's two sides to the coin where, because the commercial bankers tend to move around, it actually creates a lot of opportunities for clients that have only ever dealt direct with the banks to start looking at a broker for the relationship rather than the banker. I think there's a challenge with that, but there's also an opportunity.
Yeah, that's a really good point. When I'm speaking to brokers, I always say, like, keeping that BDM relationship really strong is worthwhile, because they know, I guess, in those, especially in those big banks, who's got capacity and capability to do the deals. Yeah. And then they can sort of forward you on to the correct place the first time, rather than, you trying to find your way. It's a bit of a minefield in the bigger lenders. So big opportunity, I guess, I think that's why our brokers are doing so well in this space, because you're their trusted advisor, and it's not just to one lender, right? You're giving them a whole heap of options, which they could never be able to get on their own without your help.
I think you're spot on. Last year across our business, we used 49 lenders. Yes, there's sort of top 10 that you do most of your business with, but it is about being in contact and building relationships with a lot of those BDMs. Like, some of them might have done 5, 6, 7, 8 deals with, and that's all we've done with them. But there's some that we've done 100 plus deals with. But even if you sort of looked at a lot of like I said, 49 different lenders we use, and some of them, the smallest might be 2 deals and some might be 5 and 6 and 7. You add up all those small ones, they still add up to a few hundred deals. That if you're not across all those matrices and policies with the different lenders, there's a few hundred deals that we would have missed in a year. So I think it's really important to stay on top of it. Within the loan market system, the Salesforce system, there's some great tools in there. Like I said about lender matrices. So take the time to know what's there. But speaking of the BDM, certainly does help.
Thank you, Jason. Matt, how do you scale your business in the commercial space? Like, is there any particular marketing that you do, or is it all word of mouth, referral partners? How does it work for you?
Look, commercial finance is quite a wide and wonderful world. So I think not that you absolutely need to specialize, but it definitely helps if you know like a few areas that you want to sort of dig your teeth into, so to speak. I guess to scale it and start bringing in business, we've done it not through marketing, but we've done it more through referral partners such as accountants. I think accountants can actually be a very, very good referral partner if you can gel with the right accounting firm or with the right accounting group. The accountants will have strategies. I could just pick SMSF, for example. If, a small business client wants to buy their own warehouse or office and the accountant said you should do it in an SMSF, the major banks don't do that. It has to be with a specialist lender, and it's a great opportunity for them to refer our services. And, that would be one area that would be a good starting point to discuss with maybe some accountants. The next starting point is a lot of accountants don't realize the opportunity with asset, and we do asset within our business, but as you're talking with the accountants about, okay, maybe we could help you climb with some commercial finance, it's a very quick look on the balance sheet to see, they've got 5 vehicles in their business and it looks like they're turning them over quite often. It's actually a very easy referral for the accountant to say, next time you need to update your asset, go see these guys. I guess that's really how you can get your foot in the door. We've done it with accountants, but then what we've found is once you can do a little bit more of the specialized lending for a particular client, I really feel that you position yourself in the market where the client will do everything with you. And what we've found, especially in the South Australian market, a lot of the wealthier clients in SA are self-employed. And so on the back of getting the business loan and maybe a couple of car loans for the client, you tend to find, we've found within our business, the bigger home loans are from those commercial clients because they want to buy the bigger houses as well. So for lack of a banking term, you get a share of wallet. You pick up their commercial loan, you end up picking up their vehicles, and then you pick up their home loan. And then what we've found as well, which is, I think, a really big benefit, is a lot of self-employed clients of ours that run small businesses with maybe staff of 10 or 20 people, their staff then come to us as well because they usually speak to their boss, I'm thinking about buying a house, I'm thinking about getting a car. And then if their boss says, we use these guys, we end up picking up that business. So I think the scale, you wanted to call it a matrix or a stepping stone, absolutely, you can market to your existing database through active pipe and things like that. But I think if you can attract a client through an accounting firm, it's a small business owner that would have those needs, would have the needs for asset, have the needs for commercial, and has 10 to 15 staff. That for us is what we call our ideal client, because we feel like we can add a lot of value and we can actually foster a lot of business out of that client as well. So if you can target those referral sources, that would be a starting point to scaling.
I have a question for Jason, actually. Yanni asked, Jason, you worked at car yards for many years. 2 questions. Was it hard getting your own loans, and what tricks do dealerships use to win the business?
Interesting question. Was it hard? Look, I call it a hunter-gatherer mentality in our industry versus the dealerships. In dealerships, they're used to having a business manager sitting in an office, and as the salespeople sell cars, they're serving the clients to them. They're, hey, I've got Joe, and Joe's bought himself a brand new Prado and he needs finance. It's very easy for the business manager to arrange the finance for Joe because they've just been served to them. So that's kind of the gatherer mentality. The hunter mentality is we're going to go out and find Joe ourselves. So was it hard? Look, probably back to what Matt was saying, it's about building relationships and connecting with people. The business that we're in is a contact sport. The more people you contact and connect with, the better you'll do. And it's really, really important to make sure that everyone in your network knows what you do, whether it's using your social media, whether it's your accountant, building a relationship with accountants. We work with a lot of accountants and mortgage brokers that refer their clients to us. So was it hard getting your own loans? It's a time thing. The one thing is a broker is very much a marathon, not a sprint. And the longer you do it, the easier it gets and the more referrals you get directly as well. If you service people well and you ask for referrals, and as Matt said before, if you ask for help, people are willing to help you. But that's the same with your clients. If you ask your clients, hey, is there anybody that you know that you could recommend to me that's in the market? You'd be surprised at how many people say yes and just put you in front of mind. Whereas we just go, cool, this transaction's done, have a good life. That pretty much is it. So it's asking for referrals is super important to get yourself out there. What tricks do dealerships do? Look, often they hold invoices back. That's a very common one. We're very fortunate that within our business, we've got a car brokerage business as well. So if we've got a client who's looking at buying a car, we said, look, let us source the car for you. And by us sourcing the car firstly, we'll get them a better price for their car than they can get themselves through the dealers. Because of the volume of cars that we do, we get fleet pricing. And by the way, that is available for a lot of brokers. If somebody wants to talk to me about it later on, feel free to reach out. So we've got the car brokerage that helps source the cars, so they don't go into the dealership directly. By us sourcing the cars, it also allows us to control the sale. We go through the fleet departments, then the finance manager is out of the transaction. They're not competing for the finance with us. Some genuine competition that does come up fairly regularly are things like the rates that the dealers might offer, like a 2.9% or a 3.9% or 4.9%. Are they genuine? Sometimes they are. Sometimes some of those campaigns are subvented by the manufacturer to help them sell more cars. For example, Toyota Finance or Volkswagen Finance might do that. Volkswagen might do it for Volkswagen because they've got 6,000 Amaroks sitting on the docks and they want to help the dealers move those cars. So the finance company will do a deal with the manufacturer and they'll subvent some of that costs to help move those cars at 2.9% or 3.9%. Are these genuine? I'm not going to say always, but sometimes they are. Sometimes the dealers also do their own subventions. And what I mean, and I say that because I've done it when I was a dealer. Sometimes what dealers will do is they'll say, you know what, if we were a deal at 4.99% instead of 7.99%, it's going to cost us an average of $2,000 difference in interest. So I'll just load the price of the car up, make sure I've allowed for that and spread it across all my cars. So can they sell the car for a lower price if they were not taking advantage of that 4.99? Yes, they can. These are common things that the dealers will do or can do, is they can subvent deals to offer a cheaper rate. But sometimes we can't control that either because they're going through, if the manufacturer is doing it, it's a different campaign altogether. Hopefully that answers the question, Yanni.
Yes, that was a comprehensive answer. Thank you. Sounds like you've got most of the bases covered, but I guess you can't win every single deal, but hopefully majority of them. But talking about referrals, you're part of the Asset Finance Exchange with LMG. Yeah, it's only a new sort of newish concept. So how is that tracking? And yeah, give us some feedback.
It's going fantastic. The feedback from a lot of the brokers has been very, very positive. The reason that they've broken it down to a state level is to be able to allow the brokerages and the mortgage brokers and the finance brokers, the asset finance brokers, to have a better connection, I guess, to allow us to connect with each other, get to know each other a little bit better. It's not a sausage factory as such. When you have the team in Notify or LMG Asset Finance, they do an amazing job. And the amount of business they've processed across the state is fantastic. It's actually outstanding. when it gets too big, sometimes it just takes time to be able to get to people. They recognize some of the challenges that they probably haven't been able to give the best service that they wanted to give, which is why they've broken it up to a state level to allow the mortgage brokers to get better service for their clients. So a huge credit to what they've done there. They recognize the challenge and they've given a solution, and hopefully we're part of that solution.
Matt, we have a question for you from Lucas. In fostering relationships with accountants, do you find they tend to be commercial in nature, remitting referral fees, or built on credibility? That is, how do you move the introduction with an accountant to the first lead?
That's a really good question, actually. I guess it depends on the accounting firm. I've had both sides of the scale where some accountants have asked for a referral fee and some haven't. With accountants, I tend to find that the better referrals have come from accounting firms that don't ask for the referral fees. The way that I give an analogy to an accounting firm, I think I tend to want to work with people that have similar values to me. I guess I know how much work goes into a commercial application. I value what I can give to the client and also the reflection it's going to have on the accounting firm. So I tend to give the analogy of, look, we're building a house for the client. Your skill set is in tax advice, but my skill set is in being able to structure the finance in a way that will be tax effective, but also in the best interest of the client. If I referred you a client for tax advice, I wouldn't want to ask for a percentage of your fee, and test me out. If you feel that we add value to your business, it's a good reflection on your client base, obviously, then I think that's the most important thing than a small referral fee. That's been my way to go about it. That being said, I can see, and probably Jason would probably speak to this, maybe on a smaller sort of a quicker asset finance deal, there's opportunity for referral fees because it could be a little bit more transactional. I don't think there's a right or a wrong answer. I definitely don't think if you had a good accountant and you paid them a referral fee, that's a bad thing. From my own experience, the accountants that I tend to work with the best don't want those fees. They just want their clients to be looked after. And they also, as they get to know myself and they get to know my team, they realize that they're really getting a service that's vastly superior than leaving their client to go get the finance direct through the bank. So they actually value the relationship because they know that at the end of the deal, the finance is going to be set up correctly. There's good communications. So I guess the proof is sort of in the pudding. If you can manage to do one deal really well for that accountant, I tend to find then the referrals keep coming. If you need to put something on the table, I'm not saying you don't do that. I've found through my journey that the accountants that are about that small income don't tend to last, and the accountants that you genuinely build a relationship with and, want the best for their clients and they want the best for you, it tends to have a bit more longevity. But that's been my experience. But I don't think there's a right or a wrong, if that's a summary.
I agree with Matt on that. Look, we've got a number of accounts that we work with as well. Some, they go, look, I don't need anything, just make sure my customer's looked after. There's some that there's a bit of a what's in it for me. He'll pay me X, will you pay me Y? And look, that does happen. We've got both ends. We've got some that are happy just for their client and some that they want a share of income. Look, they've got businesses to run. I don't begrudge them for it. They've got overheads, they've got infrastructure. And what I do find, I do have some accountants that we work with that will probably do 3 to 4 to 5 deals a month with sometimes. And part of it is because they are getting paid a share of income. We'll give them this month I might walk away with a $2,000 referral fee for the month. And they're going, oh, how good is this? Fantastic. Can I take you out for lunch next month? Well, sure, no worries at all. We might do a number of deals. We'll take them out for lunch. And a relationship does play a part as well. But some of them, look, it's a business transaction for them and they want some money in their pocket. But I agree with Matt. There's no right or wrong answer. Pick your mark, I guess.
Matt, back to you. I get this question at least weekly, and it's usually from the newer brokers starting out in the commercial space. To mandate or not mandate? Do you actually mandate any of your clients? Do you have an algorithm to who you do and who you don't, or what's your thoughts on that?
Again, I don't have an algorithm or a set play. I tend to judge it. Has my judgment been wrong in some places? Yeah. And the client, haven't won it. But I tend to get a feel with the client on the transaction. And again, it's pretty varied, but I tend to find that if it's sort of under 3 million on a commercial transaction, you don't necessarily need to mandate. If you do enough well in the appointment, any commercial client, we mandate that we have to meet them face to face and they need to give us an hour of their time. And if they don't want to give us an hour of their time, then we don't take them on as clients, because there's a lot that you've got to understand about their business when you're doing a commercial loan, and it's just too hard to do over the phone or an email. So we're pretty upfront that we need an hour of their time. And after that hour that we spend with the client on the initial to work out what they want to do, I tend to find I can, for lack of a better word, read personalities. And if I find that the personality is someone that I do want to work with, but it does maybe dictate that a mandate's in place, I'll put one on the table. If it's a warm referral from another client or a warm referral from an accounting firm and the meeting goes very well, I don't tend to mandate. We, again, deal by deal, we just tend to judge it. It's probably not the best answer for the person wanting to know, and I apologize for that. But I guess it does have to come down to a little bit about judging the personality that you're dealing with and working out where they sit. I mean, for example, sometimes you get commercial deals where they already have spoken to a bank and there's an offer on the table. And so it's a price play. And so in that instance, I'll mandate for the other banks that we're going to go to, and then look, if we're able to get them a better deal with what they've currently got on offer, we might charge a fee for the difference, but still make it a win-win. But then there's other deals that's not price driven, it's really policy driven. And so in that instance, we don't really need to mandate, because it's really around, we believe that we can help them and they put their trust in us. I guess, again, it's not a one answer fits all, but I think if you feel that you need to mandate, I think do it. Have a commercial mandate up your sleeve. Do it with confidence as well. I've never had a client that we have asked to mandate after that meeting say, no, I'm not going to sign that. We've never had one say no. Yeah, I think if you do want to test it out, give it a go, and then you'll learn from the experience once you've done it.
You know, there's different ways of charging, I guess, upfront or fees that way. And it could be an engagement fee. It might be a small fee just to take them out of the market. You don't want them, I guess, to shop around a few brokers. That's that really puts you guys in a uncomfortable situation with lenders. So, sometimes just pulling them out of the market. But I think with the mandate fee, it's something that you'll probably do potentially more when you've got more confidence that this is a deal. No, pretty much I'm going to be able to place this, and you can charge them up front. Like you said, do it with confidence. It's probably harder to do that when you're just starting out, but something that you might build a bit later. So we are running out of time. I guess one more question to you both. Jason, what's your one big advice to somebody that's just starting out in asset finance?
You can't sell the secret. Make sure everyone knows what you do. Make sure that you can offer it. If you're a home loan broker, for example, you're a mortgage broker, and if you've branded yourself as a mortgage broker, but you do want to go down a path of doing asset finance, make sure you let your customers know that you can assist them with that. Don't do what I did in the beginning. And when I started with eCarz as cars. So people thought trucks and they didn't think of me. And eventually we really had to rebrand and get ourselves out there a bit more. Make sure that everyone knows what you can do. And if you can't do it yourself, that's okay. You've got to support people behind you that can assist, whether you wanted to use your local AFX hub or you want to partner with a broker that can assist you with asset finance. If you can do it yourself, great. If not, there's options. Probably the first one is connect with as many people as you can. Get active, having coffees, get in front of as many accountants as you can, or real estate agents, or whoever your referring partners are. If you're an asset finance broker, if you want to expand, it's not that complicated to move from a car to a caravan or a jet ski. So let your customers know that you can assist them, whether it be a finance broker, not a home loan broker, or a car finance broker. Be a finance broker.
Great advice. And Matt, do you have anything to add?
Yeah, I agree with Jason. Let people know that you want to take it on. And I think the other thing is just embrace a little bit of a challenge maybe on the first one or two deals, and just know that, okay, maybe it's going to be foreign for the first 5 deals, but if you can get over that teething issues, if you want to say, or, you get over those first few, and then you have an extra skill set, you have an extra few service offerings, but just embrace maybe a little bit of the first few deals might not go as smoothly as you'd like, but you'll learn from that. It'll be a bit the same as when you wrote your first resi deal. It's probably a bit daunting the first 5, but then all of a sudden it becomes like clockwork. Also, the other thing, I think if you give it a go, you can really work out whether you like it or not, because you might find that you try to write 3 or 4 asset deals and no, I don't really enjoy it. Okay, well then LMG's got a fantastic offering. You could probably refer the deals into Jason. Likewise with the commercial, you might find you really enjoy it, or you might find that you don't. If you really enjoy it, it could be a fantastic part of your business. But if you don't really enjoy it, again, you've got the opportunity to refer it into the commercial hub, and some people that do enjoy that side of the business can help you out. So I think either way, there's people to help, but I think just give it a crack and see what you find.
That's awesome. Thanks. And I didn't even have to pay you to say that. So thank you.
Yeah.
Jason.
The question you asked me earlier, I probably didn't cover it off as well as I could have, but just a quick one. You asked about the threats in the industry. And I mentioned about other brokers and some of the things that they do or don't do and what they disclose or don't disclose. Something that I see that's very, very common, and if you're doing asset finance, just something to be mindful of. I've noticed a lot of other brokers in the industry, they put their clients into commercial loans because I touched on path of least resistance, but their client is not needing a commercial loan. And the reason that they do that is because better rates potentially, maybe it's about gathering less information. I don't really know, or not have to go through a lot of the compliance requirements under a consumer. Just really, really important to understand your client's needs, because sometimes consumer can be a lot better than commercial. If it's a nurse who's buying a car for private use, to me, that's just a straight consumer deal, not a commercial deal. But I do see a lot of people moving into other categories. It's just something to be mindful of and what you're competing against. If I was to give someone a tip, and understanding the difference between the types of loans.
Beautiful advice. Thank you, Jason. Thank you, Matt. Really appreciate your time today.
Thanks for having us. Really appreciate it.
For everyone out there, all of these webinars are always housed in Brokerversity, so you can go and watch again if you missed some of it. For those going to Growth Summit, we'll also be doing our workshop sessions there, so really look forward to seeing you all face to face. And this is something we'll continue to talk about for the next 12 months at least. Reach out to your specialists if you need any help, and we'll see you all soon.
Thanks for tuning in to Broker Bulletin. We would hate for you to miss an episode. Subscribe to Broker Bulletin in your favourite podcast app. Has this episode been helpful? We'd love you to rate and review us. It'll help us deliver content that's useful to you and help others discover us. If you have great ideas for topics worth tackling or have burning questions you'd like addressed on an upcoming episode, reach out. Links in the show notes. See you next time.